Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at ticker symbol APOG, Apogee Enterprises, Apogee Enterprises. This is a building products and equipment stock. We're going to see if the stock deserves to be around $60, if it should be higher or lower. We're going to see what institutions and hedge funds are doing and also look at the balance sheet. We're also going to see what the bullish and bearish price targets are after earnings to see where we can expect the stock depending on how the earnings go. Without further ado, let's go ahead and jump on in. So, I mean, the stock looks pretty solid. I mean, it's trading at the same level it was in 2015. I'm guessing this is a really decent paying dividend stock because it's not very volatile. I mean, the stock did go from 60 to 20. Well, 60 to 14 back to 20. No, from 60 to 14 back to 60. I don't know why I couldn't talk. So let's look at some areas of support. If this stock does continue to fall, um, I mean, looking historically, right here is beautiful, right there. 59.77 is going to be our first target to the downside. Our second target we want to watch for is right here, 57.42. Again, these price targets are really close to each other. I want to go down just a little bit further in case there's like a massive miss or something. Right here looks decent. All right there. Yep. Right there. 51.10. So those are the bearish targets if earnings are not good and the company does not execute. Now, in terms, if the earnings are good, where we could possibly see the stock going, we do have a double top right here around 67. That's about a 10% move from current levels. And let's just draw a couple more lines here. We could be trading sideways for a while. Just doing a couple things. I mean, that's pretty decent. But we also have, there's good support resistance there. All right, we've got our second target to the upside. You're probably wondering, Ryan, why did you choose that line right there? Well, we have support confirmed right here, support very confirmed right here, resistance very confirmed. These two are the dead giveaways. They both came up and touched this same exact line. That's a giveaway if I've ever seen a giveaway. So our second upside target's going to be 69.45. 69.45 right here, butting its head. So we've got our price targets to the upside and the downside. Let's look at other metrics here. RSI, I think this is with the bulls. I think this is a positive thing for the bulls. Bulls do expect the stock price to go up. However, this current monthly candle is in a bearish engulfed candle, meaning this outer candle here, this red one, is eating this green inner candle. So if this stock continues to fall, expect July's price action to hint to some more downside, but it could also reverse sometime in July. But looking at currently, it looks like the bulls are in control to the upside. Momentum is with the bulls at the moment. However, the moment this black MACD overline crosses this red one to the downside, bears got control, but not at the moment. Money flow, nice into the up. This is bullish. This is price is going to go up. Relative momentum indicator, again, nice and hot. When it gets nice and hot, it stays there for quite a while with this outlier here. So I think, although we have a bearish setup at the moment, I think the bulls have control of the stock currently. Okay, looking here, shares outstanding. This is just absolutely beautiful. You want to see companies having their shares naturally and organically accumulated. Perfect picture here. Shares are going down. That's available to the public. Sales are basically flat. And then we have our EPS, which is basically up and to the right. 2020, and then we had 2021. 2022 didn't look too good. And with 2023 and 2024 look really good. So I'd say up and to the right overall here. Sales overall basically flat, considering 1.39, 1.23, 1.31, then 1.44 hitting all-time high, and then down to 1.42. Looking at sales, we're at 1.42 for the trailing 12 months. Our PE here shows that this is undervalued, and in the future, it's even more undervalued. And that number is based off of 15 for me. So anything under 15 is pretty undervalued. Quick ratio over 1, that's fantastic. Their gross margins are really good. Every $100 they put in, they get $125.74 back. They're profitable, low float. I mean, institutions own a lot. I mean, let's run my calculation here. They do offer a dividend, so my calculation will be to the higher side, just forewarning. They have 1,360,000,000 in market cap. They do 99,610,000 in income. That's good. And they do 1,420,000,000 in sales. Let's go look at the debt and the cash on hand. Before we do that, let's load this. This page is our institution and hedge fund ownership. It takes a minute. All right, our quarterly, we've got this, and we're looking at the balance sheet. They do have 40 million in cash, which that's actually the highest they've had in cash in the last couple of years, so good for them. Plus 40 million, 10,000. 40 million, 100,000. Sorry, I messed that up. It's 40 million, 10,000. There we go. Total debt. Debt 93,910,000. Come on. Minus 93,910,000. Perfect. Just taking a quick peek sees. They have 884 million in assets, 413 liabilities. Their assets dwarf liabilities 2 to 1. For every liability, they have 2 assets. Very healthy, very healthy. A lot of insider selling. The director sold basically his full share. CEO sold about less than 10%. EVP sold 10%. President of Architectural Glass sold most of his shares. Herbert Parker sold more than half of his shares. You know, you can do the math here. It looks like they get options and then they sell. No real red flags here other than I like to see CEO buying and selling. We have Ty as CEO. He only sold once, looks like in the past 2 years and he sold less than, I mean, he made 673,000 and he only sold 10,000 out of his 120,000 that he had. So again, that represents less than 10%. Could be something that was already baked into his contract. Maybe he needed to sell for some last minute items for this year. I don't know. Anyways, overall, no real red flags, but I do like to see the CEO buying. Back to our calculation here. We're going to divide this by 21,690,000. Saying the stock is $130. We're trading at half of that. Again, like I said, the company gives out money to the shareholders. Our calculation only accounts for static current positions, not money leaving. So my price target is very high, which makes me believe if this stock is truly undervalued, basically 100%, we should see institutional ownership from 93 to over like 120. 111. So old data was 93%, new data is 111. That's a 18% increase, I believe. 93.66. Yeah, about an 18% increase, which is not little by far. All right, let's look at the big people here. Vanguard added, Dimensional Fund decreased about 100,000. Victory Capital added over 1.1 million. State Street decreased quite a bit. BlackRock increased 300,000 shares. So a little bit of a mixed bag, but overall, I mean, we have all this data too down here. Again, this was as of 6/4, so I'm recording this on 6/8. Again, you're probably asking why are you recording so early? But my content's pretty evergreen, so you could be watching this 6 months from now and still see this play out. So Anyway, we looked at targets to the upside and the downside. We looked at institutional ownership and it's up. Insiders are selling. Looks like they get a bunch of shares and they sell it. My calculated price target says this is going to go way higher, except my calculation does not account for dividends. So I should probably re-up my calculation, but as someone who does not invest in dividend-ish stocks, I don't really have an appetite. And we looked at the balance sheet. Their assets dwarf liabilities 2-to-1, which is very healthy. If you've made it this far, consider subscribing. Leave a comment, hit a like or dislike. Also, good luck if you're in this one. Bulls appear to have control. Thanks again for watching. Take care.